For more on this, we're joined by Marc Ostwald in London. He's Chief Economist and Global Strategist at ADM Investor Services. Welcome back to the programme, Marc. Now, we're seeing a broad sell-off across Asia, but semiconductors in particular are taking the biggest hit. What's driving this sharp reaction from investors?
It is a combination of factors related to the chip sector. It's the circular financing. We had the $750 billion announcement of NVIDIA basically backing OpenAI. It's the sheer volume of debt that's been issued by the chip makers. It's the fact that actually, in a lot of cases, we don't even know how commercial, i.e., how easily monetizable a lot of this AI is going to be. And then we've got, the threat of rising interest rates, which clearly makes, particularly for those companies like OpenAI, like Anthropic, which basically don't have much in the way of revenues, servicing large amounts of debt in a rising interest rate environment is not easy. So there's a lot to be worried about. And obviously, valuations were very high in any case.
Now, markets seem to be waiting for earnings from the biggest US tech companies this week. How critical will these results be in determining whether the AI investment boom still has momentum?
They're going to be very important. They always are big drivers of volatility in the individual stocks, where people will be looking, as they were last week, at the Alphabet results, is to see that the revenue streams that they have are still, increasing. So for cloud-based revenues, the cloud-based services, because if there isn't actually much material growth, then people are going to start to question even more the amount of investments being done and the amount of damage which is being done by those investments to the normally very strong free cash flows that most of these companies have. One has to obviously make the distinction that the likes of Microsoft and Apple do have very strong revenue generations outside of their AI investments.
There are also concerns over Chinese technological advances in DUV chip-making tools, which have long been dominated by ASML. How significant is this breakthrough, and does it have the potential to change the competitive landscape in the global chip industry?
It certainly does have the ability, and it also has the ability basically for restrictions on exports and usage of such materials. The most important aspect is, if basically the investments that are being made now, not in China, i.e. in the US and in Europe, are basically overpriced, and the Chinese are going to be that much more competitive, then that leaves us with a debt overhang, which is going to be unpleasant to deal with. And it also raises questions over how easily the revenue flows from AI are going to be monetizable given the amount of debt that needs to be serviced. So this is a major challenge. It's not unsurprising. China has been working on this for many a decade, to be very honest. But it is a big battle between the US and China for AI hegemony.
And Marc, do you think the market has become overly dependent on the AI narrative to the point where any disappointment, whether that be earnings, technology or spending, triggering an outsized reaction?
Well, I think that there's two factors. One, electronic trading makes it that much more easy for people to jump from one sector to another, triggering enormous flows. So we do get these very volatile reactions. And two, yes, to a certain extent, we'll want to see the stock market gaining much more broadly than just focused in the chip sector, in AI development, in space technology. There needs to be a broader base to it to make it feel like the whole economy is growing.
Marc, we'll leave it there for now. Marc Ostwald in London, thank you very much for speaking to us on TRT World.